Welcome to Consortia Small Business Accountants How to Build a High Performance Small Business. This is session 6, Increasing Cash Flow. By way of introduction, this session presents how you increase operating cash flow. Now, again, we always like to remind you of the primary business processes that we're talking about throughout this video series: management, R&D, marketing and sales, production, finance, and customer service. So again, of course, we're going to talk about finance. And as far as the workflow, once again, every business begins in deciding what products and services you're going to offer, and you continually improve those and bring on new products and new services as you go through your startup and then your emerging phases. And so the idea again is that we start with R&D, go to marketing, sales, production, finance. And the finance we're talking about is how we get paid for the products and services we provide or perform. And then, of course, as we'll talk about next time, the importance of customer service and how it fits into the primary business process workflow. And of course, this is all managed, making sure that these things are taking place simultaneously and benefiting each other. We talked about the primary business process results. So obviously, if we look at those 7 primary business processes, on the right, we're talking about what we're wanting to accomplish. And so today, of course, as far as finance, we're wanting to increase our cash flow. Small business problems, again, tie directly into the 7 primary business processes or the lack thereof. And so again, we're talking today about 6, cash flow. Now, speaking of cash flows, what you may or may not know is that there are 3 ways you can get cash into your organization. One is through operations, that is cash flow from operating activities, the normal course of providing products and services and being paid for them. Number 2, investing, cash flow from investing activities. If we happen to have some surplus cash, we put money into a money market account, a CD, or whatever the case may be, to earn interest or return our investment, for example. 3, financing. Oftentimes we need equipment. If we're, for example, a contractor, we have to buy a backhoe. It's hundreds of thousands of dollars. And obviously we're most likely going to need to have financing to be able to obtain that piece of equipment. So those are the only 3 ways that you get cash into a business, and each one obviously plays a role at the proper time. Overall, the most important thing that should finance your business is operations. And of course, that's why we talk about that today. Now, as far as best practice sales and receipts, this session presents best practice sales and receipts processes. The objective is to increase operating cash flow. So, as far as sales and receipts are critical activities of small businesses. Not only must you follow practices that increase operating cash flow and protect the company's cash from misuse, but you must process it accurately and effectively to manage the company's operating cash flow and maintain good client relations. So, if I were sitting down with you and I were trying to advise you on how to increase operating cash flow, I would always keep in mind that as we begin to put the processes and policies together, that we always have to remember that we don't want to set up sales and receipts processes or procedures that deteriorate our client relations. Client relations, again, as we'll talk about next time we talk about customer service, are absolutely essential. Types of sales transactions. So there are 3 types of sales transactions. One is called advance payment sales, 2 is called cash sales, and 3 is credit sales. Now, the difference between these sales transactions is in the timing of when payment is received. So as far as the sales transactions, advance payment is where customers pay before the product or service is shipped, delivered, or performed. So we're prepaid. 2, as far as cash sales, payment is received at the time the product or service is purchased, shipped, delivered, or performed. Think about Amazon, for example. Number three, sales on account or credit sales. Customers are provided a period to pay after the product or service is purchased, shipped, delivered, or performed. So, the most important thing as we establish our policies is to remember what we call the operating cash flow golden rule, and that is receive payment as soon as possible. That's the most important thing, again, without hurting client relations. So, as far as advance payment sales, they comply best with the receive payment as soon as possible rule because obviously we're prepaid before we do anything. It's kind of hard to do better than that. As far as cash sales, they don't comply with the receive payment as soon as possible rule as well as advance payment sales, but it's the next best option. And it's generally accepted for customers to pay for a product or service at the time of purchase, shipping, delivery, or completion. So, for example, with our school, which I'll talk about, we actually deal with other universities, other higher education institutions who use our certifications, for example, or our licenses. And so some of those we can actually get a credit card up front and get paid. But most universities and colleges obviously are government related, and they would prefer to receive an invoice and pay an invoice. And although we would prefer to be prepaid, for example, if you want to work with them, that's what's generally accepted. And so if that's not good enough for you, then you can go elsewhere, is pretty much their attitude. So knowing that we've never lost a dime working with colleges and universities, we're more than happy to forego being prepaid or even paid at the time of the actual sale. So as far as sales on account, they don't comply with the receive payment as soon as possible rule because, again, we're not getting prepaid, we're not getting paid at the time of sale, we're getting paid perhaps 30 days, 60 days later. So it's not the best way to comply with the get paid on time, get paid as soon as you can rule, but nonetheless, if you got good clients and they pay, then it's not that much to worry about. What I want to do is just take a minute and explain to you how we have set up our policies based on what I've explained to you. So, Consortia Small Business Accountants. Obviously, we provide product and service sales, and they're all advanced sales. So, we want to make sure we comply with the get paid as soon as you can policy. Now, as far as our products, Consortia is a Utah, that's where we're based, registered post-secondary proprietary school providing post-secondary education for educational, vocational, or professional objectives. We provide bookkeeping, payroll, accounting, and tax education, certifications, guidebooks, training, experience, and licensing. Now, one of the primary reasons we do that as an accounting firm is because we live in a QuickBooks Online world. That happens to be the main product we use. And one of the reasons why we provide this school is because we come across some clients who like to do their bookkeeping in-house. But the problem is that they don't have a bookkeeper who's been properly educated in bookkeeping, in QuickBooks, etc. So we primarily offer our bookkeeping, payroll, accounting, and tax education, certifications, guidebooks, training, experience, and licensing to them and a few others who just want to learn. Now, when we do so, okay, what we're doing is we're selling education courses, certifications, guidebooks, training, experience, and licenses. And so here's the process. They go to our website, which happens to be an e-commerce website. Number two, they go to the product webpage. For example, say they want to take a course. They read the information in the course, what they receive, how it's delivered. And then three, they select the Buy Now button. Number four, they enter customer and payment information, and they select Pay. And of course, we're paid within 2 days by credit card. Yes, we do lose just under 3%, about 2.65%. And some people say, well, gosh, wouldn't you rather have the 100% of the sale? And of course, you'd always rather have the 100%, but if it means you're going to get your money in 2 days and you're guaranteed to be paid, then why would you set up an account, somebody on credit, for 30 days or 60 days when you can have it in 2? And you're going to do so for a mere 200th of a percent or 300% of the amount of the product. And so some people may not choose to do that, but we do. And of course, you build that in your pricing, by the way. Now, as far as our services, we call it all-inclusive pricing plans. Our all-inclusive pricing plans include more than just bookkeeping, payroll, accounting, and tax services. And this is where we distinguish ourselves from our competition. We also include additional services that small businesses need to build high-performance businesses. For example, we help with small businesses, business incorporation, business planning, business loan packaging, whether it's SBA or conventional bank, digital marketing, website development, hosting and maintenance, video production. Of course, 4, 5, and 6 go hand in hand. Number 7, the traditional bookkeeping, payroll, accounting. And number 10, again, we go the extra mile to distinguish ourselves by providing business performance analysis and recommendations of how you can improve, how you can become a more high performance small business, as well as not just tax preparation, but we provide business tax planning and preparation. Planning does 2 things. It helps you reduce your tax liability and it helps you prepare for retirement. So that's what we do. And this is all inclusive for a fixed fee each month. Now, another thing we do is we allow people to experience all those services for free. So experience how we help you increase your financial position, profit, cash flow, and equity. We perform your bookkeeping, payroll, and accounting for 3 months for free without business interruption. And when I say business interruption, what I'm saying is whatever you're doing now, keep doing it while we do your work for 3 months. It can be done congruently, okay? In other words, you wouldn't even know it. So service, sales, and receipts process. So what happens is people go to our website, they go to the services web pages and see each service that we offer and how we do it, what benefits you derive. They then select prices. They then select get started, and then they enter customer and payment information and select subscribe. So this is a subscription. However, we have, as I stated, in a sense, a 90-day refundable deposit since we're doing the first 90 days for free. We want them to experience just how good we are because we know our competition and we know how much better we are than our competition. So we're willing to put our money where our mouth is by saying, hey, we'll do your work for 90 days. And at the end of the 90 days, you don't like us, that's fine. So what happens is when somebody goes and first does this and goes and pays the first month, in reality, we look at it as a deposit. And so 90 days later, we basically say, what do you think? Do you want to go forward? And of course, most, by far, want to go forward. And so we take that initial deposit, apply it towards the 4th month, and of course, begin to collect our subscription from that point on. So the point being made here is that, again, we want to comply with the rule, get paid as soon as you can. And so these are the ways we do it. So this is just an example. So anyway, I hope you understand how important that is as you establish your sales and receipts process. Now, we finished our 6th series, our 6 sessions. We just finished finance, increased cash flow. We have one left. We call it customer service, how you retain clients, increase client revenue, and increase client referrals. Hope this has been helpful. Talk to you next time. Have a good day.